why do 401k and employer plans have limited investment availability as investment choices?
Yeah, it's very fascinating because that's one of the big problems with 401ks is that limited availability. So let's say, like I just showed you, the Vanguard, financial index or the Vanguard, materials index that, are doing so well. I've never seen those inside of a 401k. So if you wanted to like buy those particular indexes, you can't. And it really has a lot to do with just the logistics, the way that it's set up. So there's usually an administrator, and they'll only allow 20 or 30 different funds or ETFs to choose from, and it's really kind of an administration piece. But what has happened, and I believe this was brought on by some suits against 401k providers. They have a lot of companies, and you should check with yours, now allow you to do what's called a self-directed 401k, where you can go out and open up essentially a brokerage account and buy anything that you want. It's a bit more complicated, a little bit harder to do. You have to know what to buy, but you can buy anything, any stock, any bond, any ETF, any mutual fund, because it's just a regular brokerage account that is through your company. And those are becoming more and more popular. I have quite a few clients that have set those up now, and I think that's a better way to go personally.
Do you think there's major risks with having a self-directed 401k versus having one that you have a plan administrator helping you out kind of because they are required to help you figure out your investments?
Yeah, definitely. I mean, you have to kind of know what you're doing as far as that goes. Theoretically, that list that they've chosen will eliminate some of the really crazy things, because on your own, you can go buy, any of these, really wild stocks and those types of things and end up losing, tons of money. And so that is the aspect that would be the negative. It's just you have to be able to control that risk. I manage a lot of the 401ks that my clients have in those brokerage, so we can kind of manage risk together that way. And that might not be a bad idea, is to find somebody to help you if you want to go that direction. But yeah, no, that is an aspect of it that is part of that. Although, honestly, even in a 401k that's got a curated list of 20 holdings, when, in 2008, when everything fell apart, people still lost plenty of money. I mean, you still could be down 50% pretty easily. So you kind of have to know what you're doing even inside that 401k.